Hello everyone and welcome to Autovista24's latest webinar, Europe's light commercial vehicle market, the road ahead for new and used vans. I'm Phil Curry, editor of Autovista24, and I'm sure you all know the format by now, a little bit of an introduction to the site. Autovista24.com is your go-to hub for automotive information, be it news analysis, data. We deliver this through written articles, podcasts and videos. Check the website out, details are on screen, and don't forget to sign up to our daily email, which brings you everything you need to know direct to your inbox every morning. Now, I'm joined by a number of experts from the world of LCV. We have Dr. Christoph Engelskirchen, who is Chief Economist at Autovista Group, Christian Schneider, Head of Analytics at Autovista Group, Andy Picton, who is Chief Editor for Commercial Vehicles at Glasses, Andreas Gillenbruch, who is Head of Regional Valuations, and Pierre-Yves Combeau, who is a Sales Director at Hyvia. Thank you all very much for joining me. And we have a really good agenda for you all today. We're going to be looking at the economic situation in Europe. We're going to be looking at the new and used van index and how RVs are performing. We have market outlooks from the UK and Germany. We're going to be discussing hydrogen. Is it relevant in the LCV market? And then at the end, we have a question and answer. Now, this Q&A session is your opportunity to grill our experts. On the right-hand side of your screen, there is a box which is labeled questions. Put your details in there, and we will come back to you in our special session at the end. Now, if we don't get to your question in time, don't worry, because we will follow up with you afterwards. We want to make sure that every question we have is answered. So really use this opportunity to ask some questions and find out more about views on the LCV market going forward. Now, LCVs are lagging behind passenger cars in terms of electrification. As we can see on the graph here, passenger car battery electric vehicles, or BEVs, and passenger car PHEVs, plug-in hybrids, have done really well in the last couple of years. However, the LCV market is struggling. As we can see, the lines are almost flat for plug-in hybrids and have only just started to rise for battery electric vehicles. There's a number of reasons for this. Charging infrastructure is an issue. Access to charging infrastructure is an issue. Parking spaces need to be bigger. Car park height restrictions can prevent some LCVs from getting in. And there's also the question around the use of LCVs. Them being off the road for a certain amount of time can hit the logistics market quite hard. And we're going to be talking about this a little later on as well. So, without further ado, I will come to Christoph and we'll talk about the economic situation in Europe. And Christoph, what are the current factors affecting or likely to affect the LCV market in Europe?
Yeah, thank you, Phil. So we have a couple of points that are really important at the moment and that are affecting what's happening with the LCV market. So first of all, we have that particularly high demand for them, which is and has been growing over the pandemic. And it's driven by people staying at home and home delivery demand rising, and it's staying also very high. So that's point number one, so great demand. The second point is the one that you alluded to a little bit. We have a sleeping giant here in front of us. So the LCV market is lagging behind when it comes to electrification. And the particular issue here is the cost challenges to overcome for the electrification of a commercially utilized fleet of cars. So cost parity is an issue. We're going to talk about this in a little bit as well. And second sub-bullet here is that there have been really moderate CO2 reduction targets in place. So there wasn't a lot of supply of these cars coming to market either. Third bullet on the slide. So these CO2 targets are becoming tougher, and that's going to help electrification of the LCV market. And and last point, there is ESG, environmental and social governance criteria that many of you have seen and heard of, and that's also going to drive investments into green fleets forward. So we'll see that electrification of commercial fleets speeding up.
And how are list prices of new vans reacting? We've seen some fluctuation and numbers going up in the passenger car market. As we've alluded to, vans are quite behind that one in terms of technology anyway, but how are list prices performing?
Yeah, if we move to the next page, we can see that list prices for diesel have been rising more than for battery electric vehicles, and that is for both types of cars and vehicles that we're showing here, so LCVs and passenger cars. Yeah. So it does look like the OEMs are trying to close the gap between the two powertrain types by making it more expensive to buy diesel, or in the case of passenger cars, also petrol. So they are really pushing those prices up. But for BEVs who have that cost challenge, in particular in the LCV side, they are really moderate on price rises. Yeah, so this is since 2019. Yeah, so we see effects here of scale economies, of lower cost for battery. Yeah, so that's what we're currently seeing in terms of list price development.
Now, where are we looking at in terms of battery electric vehicles? How many were sold in Europe over the last few years?
Yeah, if you look at the next slide, the market is still pretty small, right? So these are cars sold for the first 4 months of 2022 in Europe. So we're talking about a little bit more than 20,000 battery electric vehicle LCVs that are sold in Europe, and the market is very fragmented. It's not dominated by one player, and there's just very little activity from new players. So very different from what we're currently seeing in the market for passenger cars. Yeah, and what is notable here is that Maxus is now in the market with its second LCV, offers a range of 350 kilometers. And for the price you have to pay for that car, you'll only get half the range from the incumbents that are shown on the pie chart. So we do see some activity, and if you move to the next slide, that is going to pick up. 2 points I wanted to make on this slide. First of all, we see new starters and new players coming to market. I'm going to talk about it in a second as well. Arrival, Rivian, a little bit more purpose-built, and the question is a little bit how is this going to be perceived by used car markets. But also the incumbents like Ford is electrifying the Transit, offers now range above 300 kilometers, so that is clearly the trend here as well. We need bigger range, and the Sprinter is also going to see an update in range in 2023.
Christoph, thank you very much. We'll now move on to our second topic for today, the new and used van index. And Christian, I will come to you now. Now, how did LCV RVs develop over the last few years? And are there any differences when we compare them to the passenger car market?
So thanks, Phil. I mean, in general, we can say that across Europe and across all vehicle types, so passenger cars and LCVs, we see extremely rising RVs since the last 2 to 3 years, so more or less since beginning of the pandemic. I picked for today 2 exemplary countries, so Austria, because it is, let's say, an average country in Europe in terms of RV rising and RV development, and also Poland, which is one of the extremist or one of the more extreme countries that we can observe in terms of RV development, with the highest increases. And just to illustrate what is happening, we have developed this this price index that you can see here. So meaning a 100% price index is the average RV in February 2020, and then you see if the index is going up. So like here, how much more the RV is worth than in February 2020. So for example, in Austria, you see that LCVs are rising by 33%, so nearly a third compared to 2.5 years ago. And there are several reasons why we see those extreme rises. So in general, this is applicable for LCVs and passenger cars. Of course, the semiconductor shortage plays a big role because there's a huge lack of new cars coming, and the demand for used cars is getting even bigger to fulfill this. And additionally, of course, also with a lower economy growth since beginning of the pandemic, companies defleet their cars, so LCVs and passenger cars, later than let's say 2 or 3 years ago. And what we can see as well in really all countries, not only in those two examples here, is that LCV RVs are growing even further than the general market, so than passenger cars as well, for also a few reasons. So Christoph already mentioned that list prices of LCVs are rising also stronger than for passenger cars. This is definitely playing a role also for than for the RVs. What we can also see is that all the increase in home deliveries during the pandemic was creating a huge demand, even bigger than for passenger cars. So this is also a reason why LCV RVs are booming even more. And a third reason for that is also the big boom in motorhomes that we can also observe. I mean, yes, also for the pandemic, but in the pandemic, the demand increased even more, and motorhome buyers are willing to pay, or they are not so price sensitive than the expert LCV buyers, and this is also driving RVs to the top.
So, which is quite a few interesting points there. Now, electric LCVs, how are they performing on the used car market at the moment?
So we've prepared for today an analysis where we compare the percentage point EV of large cars, so large LCVs and large passenger cars, always diesel versus electric. And this is what you can see on this slide. So you see always the gap. And what we can observe is that for passenger cars, the electric vehicles are in most countries more or less in line with the diesel RVs, which was not the case a few years ago. So there we saw a bigger gap, but now they made it more or less to the same level. In Austria and Switzerland, they are even outperforming. And in Poland, we have a slightly different situation compared to a lot of other European markets or Western or Middle European markets because of the very still bad charging infrastructure. So we're still not so beneficial RVs for electric vehicles as well. But if we then look on LCVs, this is a completely different picture because we see in nearly all European markets that there's still a big gap between diesel and electric vehicles. And the most extreme, for example, that you can see here is in France, with around 18 percentage points lower RVs for electric vehicles than for diesel cars. And of course, there are also several reasons that we see at the moment for this. And hopefully this will change a little bit in the future. So one big reason for that is that the whole charging infrastructure topic is even more critical here, because all the public chargers that were built up in the last years, are mainly focusing on passenger cars. So in terms of dimension especially, I don't know who of you have tried to park an LCV or a car with a trailer on a public charger. This is quite tight, let's say it like this. And another reason is that the list price level of electric cars of electric LCVs is still very high compared to diesel. So if you take passenger cars, they are getting closer in terms of list price, but for LCVs we still see a big gap. So you see it here on the top right corner, an example for Germany, where you can see that we have a list price differences in net prices of some roughly 12,000 euros, while the used car customer doesn't see such a big advantage. So there's only roughly €1,000 benefit for the electric vehicle on the used car market, and this is of course leading to a huge drop in percentage points. And if you think that €12,000 difference in price in Germany is a lot, you should have a look on France. There we have a gap for the Sprinter of €21,000, and in Spain it's even more extreme. There we have €30,000, which is the double of a diesel Sprinter list price. And no used car customer at the moment is willing to pay this significant uplift at the moment. And another topic is, of course, that not in all countries, but in a lot of countries in Europe, we don't see driving bans into cities at the moment. I mean, of course, UK is a little different, but in a lot of countries, we don't see the bans at the moment, and also not coming in the near future. And this is also a reason why the used car customers doesn't see such a big potential from price yet.
Excellent, Christian. One extra question, actually, if I may. Do you think we'll see in the future the introduction of distribution hubs around cities? You mentioned there's no bans at present, but if they should come in, would it make sense for companies to think about distribution hubs increasing their van fleet for last mile drops?
Definitely, I fully agree. Also because you have not only in terms of electrification, also in terms of size of the cars, of course. I mean, if you have small old city centers, for example, it is quite tough to go in there with large LCVs maybe. So it's definitely more beneficial to have a hub outside of the city and then do the distribution maybe with smaller and more electrified cars. Yeah.
And do you think that would increase the amount of RVs, the amount of EVs in the market available, and would that have an impact going forwards?
Yes, because also some of the legs, I mentioned the charging infrastructure as well. I mean, if you have an own hub, then you can also take care of the charging infrastructure at your hub and make them ready. So I think this will definitely be a benefit for a new car, and I think also RVs.
Excellent. Christian, thank you very much. We're now going to have a quick look at some market outlooks, or say a quick look, a detailed look at some market outlooks. We're going to talk about the UK and Germany. First, I'm going to come to Andy Picton. Andy, now the UK market is almost unique, if you like. It's right-hand drive, and there's no borders with other mainland countries. So how is the market in the UK coping at the moment?
I think it's good to point out, and morning to everyone, that I think following a strong year last year, a recovery when registrations reach near sort of pre-pandemic levels, we're seeing demand is strong this year, with order banks pretty much full for all manufacturers, with any new orders now, I think, going into next year's order build program. But I think the problem is, and we can see this from the SMMT registration figures, that the actual getting the vehicles on the roads is the problem. And I've tried to split down here where the demand is. Obviously, electric vehicle demand is growing. It's up quite considerably on last year and now holds over 5% market share. And obviously, as Christoph mentioned earlier, there are sort of tougher CO2 targets for LCVs coming along. And obviously in the UK, we had the added sort of hindrance, I guess, if you want to look at it that way, of emission zone and ultra low emission zones, clean air zones. So cleaner vehicles are obviously required for those companies that are buying. Supply, though, is heavily affected by the global supply chain shortages. Obviously, the war in Ukraine is not helping, with a lot of parts and supplies coming out of Ukraine. Increased energy and fuel prices, cost of raw materials, bodybuilder delays, and obviously delivery issues with some vehicles built at production, waiting for other parts to come to them. The result of this is obviously regular price increases, extended build and delivery times, extension of fleet and rental contracts now. And as I say, I think as of May, we are 25% down on registrations on last year. And if you think of the semiconductor issues as well added into that, I think the earliest we could expect sort of some form of normality for that is this time next year, but that is dependent on lots of other ulterior sort of situations. So.
Indeed, and it's a situation we're seeing across the entire automotive fleet, isn't it, with passenger car and van as well. So does all of this, and as I mentioned about isolation, we're obviously talking about delivery issues and supply issues with semiconductor and other parts. How does this affect used van prices, and how does it impact residual values as well?
I think if we move on to the next slide, there we go. Last year, or during the pandemic for the last couple of years, it was a bit of a perfect storm. There was no new vehicles being built, or very few, and obviously a shortage of quality stock or any real stock filtering through to the used market. You know, and obviously as we were in the sort of the midst of the pandemic, there was a shift to home shopping and home working, which meant that an increased number of vans were needed to supply, whether it's medicine, foods, or shopping in general. As I mentioned before, clean air zones, ultra low emission zones have affected the demand there in the used market. Fewer D fleets because there were no vehicles being built, so those fleets had to run their vehicles for longer, and where there was no new vehicles coming into the market, there was that push, that huge demand for stock in the used market to meet that shortfall. And as a result, and as we can see from the graph at the bottom there, demand and pricing for used stock spiraled. As you can see, before the pandemic, 2019, average sale price for all vehicles, all ages, was around about £6,200. Where we're standing now, that figure now has spiraled to £10,300. The average mileage has gone up, the average age of the vehicles has gone up, but still the price continues to go up. And that we're now seeing a very strong position in the used market for nice, clean stock.
And how is demand for Euro 5 and Euro 6 models likely to change going forwards?
There is a bit of a come down now. If we can see here on this slide, you know, in the peak of the sort of the pandemic, Euro 5 values were up around about 70% on pre-pandemic sort of values, and Euro 6s were up 60%. But following the 2 years of boom, we're now seeing a bit of a slowdown in the retail market, and this has started to take effect since the end of last year. Average age and mileage is increasing, first-time conversions are down, pricing for parts and for paint is increasing. 36-month lease contracts, which were roughly 8 years, are now up to 9 years, and this is all driven by the uncertain economy and a continued increase in price and just utility bills all round. You know, pre-pandemic worn vehicles are costing dealers now a lot more to take up to retail standard. Very few traders want to buy vans with damage. They'd rather spend more on something that can be pretty much wiped over and put straight onto the forecourt. But there are very, very few of those around. So those vehicles that are coming through to the market, they are having their prices pushed higher and higher. There is a little bit more stock in the used market than last year, but not a lot. And the vehicles that we are seeing are older. Those fleets that have been able to defleet are tending to defleet their oldest vehicles, those harder works, with higher miles and ultimately poorer condition on them. So we expect on the back of this RVs to come under a bit of downward pressure as we go through the rest of this year. There will be a bit of a two-tier market with strength in the Euro 6 vehicles, especially the later year vehicles, but the older Euro 5 vehicles, we expect their values to come under some pressure. As I say, Euro 6 stock remains in high demand, and that is mainly in the UK to do with clean air zones and ultra low emission zones.
And the UK is banning internal combustion engine vehicles from sale, new models I should say, from 2030, with a complete ban at anything that's not zero emission by 2035. As we saw at the start of this webinar, the LCV market when it comes to electric vehicles is lagging behind. Is this 2030 ban having an effect already on the UK market, as it's one of the earliest in the continent to be bringing in an electric vehicle ban?
I think it is slowly. I mean, the utility companies, and there are some of the bigger utility companies are already taking the plunge and are running fleets of electric vehicles. But there is some concern, especially for some of the outer areas of the UK. We're talking about the West Country, Mid Wales, Scotland, where the infrastructure in particular is not as strong. There is a desire for that infrastructure to improve before a lot of the businesses will take up BEVs. But that is slowly but surely happening. All manufacturers are introducing new electric vehicles. You know, Ford now have just introduced their electric Transit, and I think by the end of 2024 they're going to have a fully electric range of vehicles. Some manufacturers are already committing to pull away from ICE sales way before 2030 deadline, some as early as 2027. And I think a lot of this is to do with the huge cost implications of developing Euro 7 vehicles. You know, we've got the tougher CO2 targets. There will be the introduction of further clear air zones and ultra low emission, or the widening of the ultra low emission zone. And it's no real surprise that to get that Euro 7 target and to build new battery electric vehicles, we're talking of partnerships, manufacturer partnerships, and obviously one of the latest is Ford and VW partnering together to bring out their new range of electric vehicles. We have Stellantis as a group who have obviously started already to bring out small and medium size and large size vans, electric vans, and that will continue. And obviously they have a partnership agreement with Toyota as well, who are using their vehicles to electrify the Toyota light commercial fleet. So there are good things coming along, and it's just trying to get, I guess, a combination of infrastructure and pricing right to make these vehicles appealing. Development and the cost of BEVs means that at the moment, I guess you're running these electric vehicles for longer. So it's going to take some time before we see a steady flow of used battery electric vehicles coming into the used market. The few that have had mixed results. Some of the earlier vehicles, where you're talking about the Renault Kangoo ZE, as it was, where you had to lease the battery in addition to buy the glider, in effect, they have not gone down too well in the used market. But the newer sort of generation of an all-in price, including the battery, have performed a whole lot better. And I think in the used market, we'll be looking at sort of smaller one-man bands and SMEs who I think could make a battery electric vehicle work much better for them. But obviously they're going to be completely reliant on that first-time buyer, that fleet, to buy that electric vehicle to generate that used market for them to purchase their used vehicle there. Increase in fuel prices, obviously, they continue to go up, and I think that is focusing the mind of a lot of people. It is the whole life cost you need to look at with an electric vehicle, and obviously fuel is a big part of that. So I think if prices continue to increase, and there doesn't seem to be any sign at the moment that they're not going to, this could focus the mind and get people to switch earlier. But I think RVs generally, for all vehicles, will remain strong as we move towards 2030. We have longer life cycles on battery electric vehicles, so that 3-year 60 cycle I think is going to sort of drift out with electric vehicles. You're looking at 4 or 5 year sort of periods, so I think there'll be less in the way of ICEs coming back to the used market over the 3-year period, which means RV should stay strong. And as I say, for used vehicles, there is no impact by the 2030 restraints on a used vehicle. This only applies to new vehicles. So as long as a used business wants to run a diesel van, there is nothing actually stopping them way past 2030.
And final question to you, Andy. Is the LCV market in the UK ready for new players? There's a number of companies that have announced new strategies, new launches, so on and so forth. How are they looking?
Yeah, absolutely. There is, if we can just move on to the next slide, there we go. There's just a small selection here. I mean, obviously there is space for new players, absolutely. And the first three on that list there are due out this year. Ineos, who are building a Grenadier 4x4. That is coming out, and I think production is starting on Q2 for that vehicle. It will be available as petrol and diesel. They are also have announced that they are bringing out a smaller 4x4 that will be battery electric, and also they are very big as a company, pharmaceutical company, into hydrogen. So that is another powertrain that they are looking at for the Grenadier. They will be coming later this year and into next year. Arrival, may have seen their vehicles at certain shows around. They are still to launch, but again are due to launch in Q2 as a parcel and a cargo van, fully battery electric. Morris Commercial, you may remember the original Morris van from the 1950s and 60s. They are looking to bring out, that's the blue van there on the right. That is due again to go into production later this year and is fully electric. Vans that are already in existence, as I'm sure you're aware, we have the LEVC hybrid van, petrol electric hybrid. Maxus, with their range of commercial vehicles, the eDeliver 3 small van, the Deliver 9, which is the larger van. They also have an electric eDeliver 9 version of vans and chassis there, and they've just launched at the commercial vehicle show the T90 EV pickup, which is the first fully electric pickup to come to the UK. So all these are exciting moves forward. And then we have a couple of others here where these are importers, Innovation Automotive and JLC Group, who are bringing in other products from around the world to sell into the UK, and these are electric vehicles. And the last one I just mentioned there, because this will be a brand new van range, which is due to launch in 2025, and this is obviously from Kia. They have recently announced that they are to bring out a full van range, electric van range. So that will be exciting to see that as well.
Excellent, Andy. Thank you very much. We will now move on to a look at Germany. Andreas, I'll come to you and I'll ask the same question. What is the current outlook on the German market for LCVs?
Well, thanks, Phil, and good morning to everyone. So I think it is common sense that LCV electrification is obviously behind their more frequent and visible little passenger car brothers in terms of technological development and attractiveness, let's say. So it's not surprising, as you can see on this chart, that just 4% of newly registered LCVs are fully electric. And if I say here LCVs, it's including all the passenger car derivatives like Kangoo, like Caddy, like Multivan, Caravel, etc. So, and of these 4%, 1 in 7 is a street scooter, which is, I'm not sure if you know, that car is almost entirely contract production of the German DHL and hardly relevant on the used van market. So as they don't return. So although LCVs have treated in the past year same as passenger cars with regard to the environmental bonus, taxation, etc. So this special surge that we had in the new electrified passenger cars that resulted significantly from the reduced personal taxation for the numerous user-chooser company car drivers has so far failed to materialize for commercials. So just to compare, 4% EVs to of electric LCVs to more than 13% in the new passenger car segment. And if you put together the electrified cars, all in all, it's in the passenger car segment, it's 27%. So the reasons against purchase and the doubts, such as appropriate infrastructure, suitability for everyday use, payload needs, range anxiety, reliability, 24-hour availability, even though it's not realistic or really needed, still seems to be too great. And the financial advantages, or in other words, the pressure to convert to electric, are still too small in comparison, at least in Germany. So we have no such clean air zones or driving bans inside, as discussed, or like in UK, taxation on LCVs is already lower than the already rather low passenger car road tax. So if you just click in the small graph, at the moment, these two factors are driving up the prices, especially for used diesel powered vans. So and much more than for passenger cars. So you see the graph. This is the same as for Poland and Austria that you already have seen. So LCVs are really stronger rising, and it's coming from the shortage of supply, of course. So this is nothing new, but combined with a constantly growing demand for transport capacity. We have discussed that as well. So in general, the supply of used vehicles from the past years should actually be quite adequate. If you just take even in 2020, which is the pandemic year, more than 500,000 have been registered, which should in itself cause a solid amount of used cars for the years until 2024, 2025. But the ongoing supply crisis has already reduced the volumes on offer, and additionally, the new vehicle discounts accordingly by the manufacturers, which would otherwise continue to push price level of young used vans down, as in the past. So not to mention that the rising demand for transport capacity has so far in the past years simply been met with more and more vehicles, which is now a problem. So for example, according to KBA figures, the growth in total annual inner German mileage of up to 3.5 ton LCVs grew from 41 billion kilometers in 2014 to 55 billion kilometers in 2021, which is huge. It's 1/3 plus, while the average mileage per vehicle remaining nearly unchanged. So it was just achieved by simply adding more and more vehicles.
So what opportunities are there? Germany is different to the UK. There's opportunities for cross-border remarketing. What are the opportunities for the LCV market out of Germany?
Well, no, just switch back to the page before, please. So as you can read, this 500,000 new registrations. However, only 300,000 of them remained as net growth per year. So of course, this was partly due to decommissioning and scrapping, but mainly to the export of older ICE vehicles, especially to Eastern Europe and Poland as an important used car importer in particular. So additionally, with a large potential there of self-employed drivers, thus a target group for cheap used LCVs who get low loans from a German point of view and move up to 3.5 ton vans all over Europe with a car driving license. So since 2020, this used car migration has rapidly decreased by roughly 40%. So the export reduced by more or less 40% because of the inner German demand and prices coming from supply crisis, etc. So this is most probably one of the reasons of the above average increase in used car prices over there. If you now turn to the next page, if we now look into the near future, we assume two major developments, and one of them is according to export or to cross-border selling. So first of all, due to the continued supply crisis, probably into 2023, some say 2024, prices for used combustion LCVs are expected to remain stable at a high level, even if they will drop a bit. They will drop as the current level is stretching the financial resilience of that local target group. But secondly, manufacturers have an enormously increased pressure to accelerate transformation. As you can read here, and this is from 2019 and coming back now by the media or by the EU, the 2035 zero emission target also applies to new LCVs, and so this is sometimes forgotten. And that's not all. There are challenging interim targets. 2025 should be minus 15% CO2 for vans. 2030 should be 31% minus versus 2021. So this can't be done just by improving the efficiency of combustion engines. It needs a rapidly growing share of electrified vans. And the good news is that analysts, we talked about list prices, analysts expect price parity for LCVs to occur as early as 2025, 2026. So this will be an important step for this especially cost and benefit oriented segment in new as well as in used car business. Once you click the adoption map, so moreover, as we continue to find markets in Eastern Europe with slower adaptation, as you can see, the yellow ones will be a little bit behind us, and we already have established export channels. We will again be able to absorb surplus used vehicles of older ages or the old vehicles to converted EV customers. So this will be a target market in the next future. Currently, it is not, or it's less, but it will come up within the upcoming years due to this rapid transition.
So are OEMs taking a different approach when it comes to the battery electric vehicle LCV market? Were they looking at it differently? Are they producing differently? What are they doing?
Well, yeah, there is a significant difference if you just switch to the next page. So, but first of all, acceleration in this, what we said is catching up technologically with passenger cars. So this is the status is different. So this is the first thing. Range, charging times must be brought up to date. So this requires, above all, designated eLCV platforms. And well, we all know, or we've seen that ID. Buzz is now taking the first step here, while with passenger cars, it's already there. And all the big players have also something up their sleeves there. However, despite all the technological developments and setting of external conditions, regulation, incentives, etc., infrastructure, it should, or all should be aware that it remains a huge challenge for the retailers to bring such a product as an electrified LCV, which requires explanation far beyond simply car specs and price, closer to used van customers in particular. So manufacturers and trade organizations still have literally mountains to move, which is different from the passenger car, where they are already there or nearly there. And how is direct and online sales, which is famous topic currently, sales agency structure, etc. How is it prepared for this? So just to the next slide. And what is also different, and last but not least, the LCV segment has potential for specific concepts due to its usage orientation in the new car sector. So there are, and coming up, very light vehicles, electric cargo bikes, or models, as we've heard, specially tailored to large CEPs like Amazon and currently DHL. So the question, however, is what will happen to these vehicles in the expected number of units? Sometimes they're talking about thousands in their second life cycle, or whether there can be a corresponding demand for such a specified and specialized vehicle. So this will be interesting to observe. It's different. It has to be built up, taken care of, and differs completely from the to-do lists with passenger cars. So even though much smaller in terms of numbers, it is probably the much more challenging transition with commercial vehicles to electrification for the OEMs than for passenger cars. A lot more to do. And just to round off the topic and elegantly lead over to the next speaker, zero emission does not exclusively mean battery electric.
Thank you very much, Andreas. And yes, it does not just mean battery electric. We'll now come to the question of whether LCV is a job for hydrogen. Pierre from Hyvia, thank you very much for joining. I guess my first question to you, hydrogen has been a bit of a mixed bag in the passenger car market. Some have embraced it, some have shunned it. So why pursue it in the LCV market? Why is it good for that market particularly?
Okay, well, thanks a lot for the invitation, and hi everyone. I'm very glad to have this opportunity to discuss about Hyvia and hydrogen in LCV market this morning. You're right, H2 is something that is globally speaking, a very popular topic throughout Europe, not only Europe at the moment, of course, with under two main pressures. I would say even three. We have the global targets of the companies wanting to reduce their footprint and their CO2 emissions quite drastically, mostly for big companies by 2030. Second, we have also in Europe a big pressure from European Commission, as you already said, by 2035 to have a zero new vehicle, including LCVs, put on the road. So this is a big gap compared to today's situation, with more than 80% of all our LCVs are currently diesels. So we know the step we have to do. And third, H2 is in terms of subsidies and of I would say global energy strategies for European states, not only European, but as we are now in Europe focused, we have really strengthened plan country by country. And even 1 month ago, we had the Repower EU plan that has been unveiled by the European Commission, saying that by 2030, the targets of the production of green hydrogen has simply doubled within, thanks to the, I would say, not thanks, but due mainly to the crisis in Ukraine and the fact that we will miss a gas solution in the coming years. So I would say that H2, there is a real momentum at the moment, and the car manufacturers like Renault and obviously Hyvia is dedicated to this subject, have really to take care about it first, but not only us, it's also a question of giving possibilities to companies to have an alternative more for high demanding journeys for big LCVs mainly, or even sometimes medium LCVs, knowing that they need a range and they need quick refilling solutions that currently is not there.
Now, I know you just mentioned refueling, you mentioned medium and large LCV. I know Hyvia is doing things slightly differently, because you're looking not just at the vehicles, but the entire sort of mobility chain when it comes to hydrogen. Can you just give us a quick overview of what you're doing?
Yeah, of course. I think there's a first slide. Yes, thank you. So Hyvia, in a nutshell, we are obviously the name is for hydrogen, via for the way in Latin, so way we will pave the future for carbon-free mobility. We are really dedicated to this subject of carbon-free mobility, meaning that thanks to our experience in the battery electric vehicle, as you mentioned, Renault was the first car manufacturer in Europe with Renault Kangoo. At that time, we had really difficulties to recharge, because the recharging station for electric battery vehicles were very scarce. So knowing this past, we wanted to offer from the beginning a solution for the entire ecosystem of green hydrogen, meaning that once you have green hydrogen, green fields, green energy available, windmills or solar panels, eventually nuclear plants that are also green for CO2 emission, you can connect it to an electrolyzer, make your green energy, your green hydrogen, and then dispense it through a network of HRS, or of hydrogen refueling station, and at the end use this hydrogen in large LCVs like Hyvia is going to put on the market. So the idea is to provide a solution for everybody. For people that want only vans, it's of course possible, but if you don't have any refueling station, which is most of the time very often in the market now, or even if you want to produce yourself, if you are big companies or big city, to make your electrolyzers yourself. So for carbon-free mobility, it's a joint venture. So it's a 50-50 company between Renault Group and Plug Power. Plug Power, American company dedicated for H2, mainly in forklift business, present in US for 20 years. They have more than 50,000 fuel cells on the road, so very reliable and very precise in this business. And so the complete and unique ecosystem is our solution and our promise to the market, knowing that we are a based company in France with 4 different locations.
So my next question, Pierre, I think we've got a, how does hydrogen in a vehicle work exactly? What's the difference? What do you need for that?
Yeah, in terms of technology, hydrogen vehicle for most of the solution you're based on an electric vehicle. So the engine is electrical. There is a battery, standard battery. In the case of HYVIA, we have a 33 kilowatt hour battery, and this battery is there to provide electricity to the engine, but its main source of energy of this battery comes from the fuel cell itself, and the fuel cell is linked to big tanks that contains about 6 kilograms of hydrogens, and these tanks are refillable within 5 minutes. So we have, thanks to this quick charge, a very sufficient, like a diesel experience again. And on top of that, these 6 kilogram hydrogen provide you a much wider range of activity, up to 500 kilometer range. And so this is very, very accepted, particularly for companies that have, like construction companies, services company, e-business company, logistics, or food deliveries that have city bans coming in most of the cities in France, in UK, and in other countries coming. So we have big pressures from our own customers wanting to have those kind of solution, because they run more than 200 kilometers all the day, all the year, even when it's very cold or very hot, which the battery electric vehicle is not about to do. So I have a video, maybe you can see it and understand better.
We're having some technical issues with the video at the moment, Pierre. I do apologize.
Okay. No problem,
so
no problem. So you can see it afterwards.
Absolutely. If anyone's interested, contact details will be available at the end. Yeah, one last question. How important is a strong infrastructure when it comes to hydrogen?
Yeah, so you're perfectly right. So this is why, as I said at the beginning, the infrastructure problems that we're facing now are solved, or at least addressed, by HYVIA, thanks to the complete ecosystem offer that we have. Nevertheless, in terms of current infrastructure, we know that the pace, the road is long to have a sufficient infrastructure. We think that we will reach 1,000 refueling station in France and in Germany by 2030. This is the plan that we are sharing regularly with the hydrogen specialists and with the governments. So there is a real roadmap for this 1,000 units in France and Germany. Sorry, I don't have the figures in UK, but I know that UK is also putting money on it. There are strong investment plans at stake to reach these targets. And there is a next step by 2035, given also by European Commission, that is in the Fit to 55 pack. They asked to install 1 refilling station every 150 kilometers on the main road of Europe, so mainly on motorways, so that
Pierre, thank you very much for your time. If you just stick around, we'll have a quick summary and then a few questions that have come in. Again, if you want to submit questions to our panelists, please do so. If we don't get through them all, we will follow up with you afterwards. So the LCV market, we can see, is lagging behind the passenger car market when it comes to electrification. Demand grew strongly during the COVID-19 pandemic, and LCV list prices for diesel are rising more than for passenger cars. Used LCV prices are rising even stronger across Europe. Electric LCVs are featuring significantly lower RVs than diesel vehicles. Demand in the market is strong, but suppliers are being affected by a number of factors. And these external factors will determine the speed of transition to electric LCVs, as well as other pressures, such as infrastructure, for example. Hydrogen offers additional range and speed of charging, but is a currently costly option. Specific use cases will help initially, and we can see as the infrastructure grows how that market moves forwards. So we have time for a few questions, and we've had a few come in. So I will start by asking, are battery electric vehicle LCVs purchased for real production use, or are they more for greenwashing the company image? What kind of impact on residual values if BEV LCVs are bought mainly for the new and signalling purposes? Christian, could you give us some insight on that one?
Yep. I hope I got the question correct, but I think there's a big, especially in terms of new car and used car buyer, a big difference because of all this ESG stuff that also Christoph mentioned. I think especially for I'll start from the beginning. New car customers are have normally bigger fleets, and for them it's normally more important to have, let's say, at the moment, a greener image besides all of the regulations that we maybe have in the countries, while the classical used LCV buyer is normally don't have a big fleet, and they are normally a smaller company, and for them costs are really the key thing when it is about buying an LCV. It's not so much about their green image and everything around that. So meaning all this green, let's call it this green image, is helping maybe for new car sales for electric LCVs, but it's definitely not, or used car prices and used car buyers are benefiting not that strong from the green image like we see for new car.
Another one's come in. With rising fuel prices, petrol and specifically diesel, and the increasing, as Chris pointed out, the list price increases, do we think that there's going to be an opportunity where the used van market will pick up? Do we think the manufacturers almost are pricing themselves out of the new vehicle market, and could that be detriment to themselves because drivers may instead buy a cheaper vehicle and instead make sure that they're offsetting the price of the petrol and diesel increases? Christoph, can I come to you for that one? How are petrol and diesel prices impacting or likely to impact new vehicle sales?
Yeah, so we've always said that, either you lower the prices for BEVs, yeah, or you increase the prices for internal combustion engine cars if you are on your quest to price parity, yeah, or TCO competitiveness, which is a particular challenge for the LCV market. So I think it's a solid approach to move the prices of internal combustion engine up, yeah, while and this way closing the gap to battery electric vehicles, because we do see that shift in demand, but also in supply away towards electrified vehicles. So at some point, customers understand, and this can be managed and by the OEMs, that it'll become more and more expensive to drive internal combustion engine cars and vans. And the price rises at the moment. That uncertainty around what's going to happen with fuel prices is also helping to make electrified vehicles more attractive. So, I think the strategy is okay. I don't think that it'll drive customers away, because supply is just getting out of the market so quickly that at some point you just have to make your peace with an electric option. Yeah.
Christoph, thank you. Right, we have come to the end of our time today. We have quite a few questions that have come in, and again, please don't worry, we will be following up with those. We also have our contact details here on the screen, and everyone who's attended will be getting a copy of this presentation and a video of the presentation as well. So don't worry about making notes on those. You'll be getting these shortly afterwards. If you want to follow up with us, please do feel free. And if you want to know a bit more about total cost of ownership benchmarking, then you can request a demo. Contact details for Tim Budgeon, our sales director, are also on screen. And again, this presentation will be made live to you shortly after this session has ended. Thank you all very much for joining us on the latest Autovista24 webinar. I'd like to thank the panel as well for coming on and sharing their expertise. And don't forget to keep up to date with the latest going on in the automotive market by logging on to autovista24.com and signing up for our daily email. Thank you, everyone.
Thank you. Have a nice day. Bye.
Bye-bye.